Okay, we are live now. Hi everyone, my name is David Kosmider. I am the creator of TimingResearch. This is our web show uh, for September 29th, 2014. If you are new to Timing Research, we are building a crowdsourced sentiment indicator. Each week, all Timing Research subscribers receive a quick 5-question survey to gauge their thoughts on near-term market conditions. And then every Sunday afternoon, I gather that data and publish a report. So today's show, we will be discussing the 53rd weekly report. And if you have not had a chance to look at this one yet, it is available at TimingResearch.com/reports. So I have two guests with me today. Alla Peters of AlphaWaveTrader.com and John Nyaradi of WallStreetSectorSelector.com. So, Alla, if you would, just tell everyone briefly about yourself.
Hello, traders. Hello, David. It is my pleasure being here. I am the educator, strategist, and trader at AlphaWaveTrader.com. I developed my own method that based only on price and Fibonacci. Method applies to any instrument and any time frame, and S&P is my favorite instrument. My background, I'm a classic concert pianist from Russia who arrived to a beautiful United States of America 25 years ago. 25 years ago, being a pianist in United States of America was not exactly most popular thing, so I became a registered nurse. I worked as a registered nurse right out of college at Johns Hopkins Hospital for a number of years. I learned a lot about psychology and psychiatry, and I still remain incredibly focused in that aspect. Becoming investors since the day I arrived in this country, I started paying attention to the companies. I started investing, I started buying, and eventually I became a position trader. In 2008, the companies that I held for quite a long time, companies that had phenomenal fundamentals, were no longer working. Therefore, I started paying attention to technicals versus fundamentals. And that's how I derived at developing my own method. So all the levels that I use in my trading and education course, I base on the rules I apply. And that's pretty much my background. So thank you so much for having me. I look forward to discussions.
Great, thank you, Alla. And John, if you could share a little bit about yourself.
Yeah, I'm John Nyaradi. I'm publisher of Wall Street Sector Selector. We're an online media site. We specialize in financial analysis, particularly exchange-traded funds. And we publish original content as well as some content from other people. We have a couple of subscription-based newsletters, and we trade, like all on technical indicators mostly. And my articles appear in USA Today and MarketWatch, Seeking Alpha, Yahoo, a lot of different places on the internet. I wrote a book called Super Sectors, which was published by John Wiley and Sons. And so that's what we do. We try to find the best sectors in the market. We can, with ETFs, you can go long and short. And we have you can go double ETFs. We can look at trading the VIX. So a lot of opportunities. That's what we specialize in.
All right, sounds good. Thank you both for being here. And okay, so let's get started with the report. And I have activated the Q&A app for this Hangout. So if any of you watching have any questions for us, just enter your questions, and we'll get to them at the end of the show. So I'm going to go ahead and share my screen now to display the report for this week. And again, you can download it at TimingResearch.com/reports if you haven't seen it yet. So as I said, this is the 53rd week of the report, and we're going to Page 1 of the report deals with the multiple choice questions, and it's questions 2 and 3 of the 5-question survey. So question 2 asks people to guess or forecast what they think the S&P 500 is going to do for this week. So all these questions, or all this data, was collected up through Sunday morning, and so for this week, 45.9% of respondents selected higher, and 54.1% selected lower. So we have a slightly bearish sentiment here. And so let's start with you, Alla. What would your forecast for this week be for the S&P 500?
Well, actually, as witnessed by the long trade we had taken in our room since the open, we had been long on S&P. We had taken the long for 12 points this morning. My bias had been long since Thursday on hourly charts. Again, I'm referring to hourly only. So our long trade reached the reversal zone and we closed it. What is the price currently telling me? What is my projections on small time frames such as hourly? To the upside, I'm monitoring extremely closely 1975, 1982, and the most critical level 1990. So again, that is hourly for day trading purposes. What am I seeing on monthly? I'm seeing it only as a bearish correction on my monthly chart. So again, if we're referring to larger time frames, what am I seeing on S&P is the following. The long based on my method from 2009 is extremely exhausted and extremely tired. This is extremely dangerous place to enter long positions. The sellers are not powerful enough yet. You have to trail your long position extremely closely if you position trading S&P. So it's extremely critical area between 2000 to 2100. 2100 is absolute exhaustion area. So I'm not seeing serious selling pressure yet. I'm seeing only bearish correction as of right now. And for that reason, on hourly chart, my bias is long. Since Thursday, 11 a.m. EST, we had been taking only long trades in our trading room, and every single long trade had reached targets, the bare minimum 3 points. So again, today's long for 12 points had been reached. Next level to the upside, critical 1975, the end of the minor trend 1982. Extremely important level. So if 1990 is broken, price will fly until 2000. But again, first 1975, second 1982, third 1990, and only then 2000.
Oh, okay. But so for this week, if you had to guess one way or another, you'd probably go with higher, right?
Well, as of right now, we had been bullish on hourly charts. So again, if you're trading monthly chart, you want to trail extremely carefully. You don't want to acquire any long positions. Again, in day trading room, I concentrate on extremely small time frames, such as hourly. So my bias on hourly since Thursday during trading room hours had been bullish. So here's the following. Long term, if we're looking on daily, this is my projection to the downside. If we're looking on daily, once this hourly structure is completed. To the downside, 1955 is critical, extremely powerful level on daily, 1933. This is long-term projection for the rest of the week, 1914 and all the way to 1884. So, again, bias, short-term trading hourly, bullish. Long-term day chart is bearish.
Oh, okay, great. Thank you. And John, what would your forecast for the week be?
Well, I would agree with what Alla said. You know, I look at not hourly, but I use mostly daily charts. We see the MACD in decline. You know, various ranges. That tells us that the momentum is you know, turning downwards. There's significant support at the 50-day exponential moving average, 1978. That's being tested right now, and then more major support at 1970. So between 1970 and 2020, we're in this trading range. So a break above or below that would, you know, point to the next directional move. Certainly, though, momentum would point towards downwards. I'm also looking at the Russell because we have a big divergence here between the Russell and the Dow and the S&P. The Russell's below its 200-day moving average in decline. These need to match up one way or the other. Either the Russell needs to return to a bullish configuration, or the S&P is going to continue to be bearish. Same thing true with the NASDAQ. It's also right at its 50-day exponential moving average support level. So I think the higher, lower ratios are about right. I mean, it's a tug of war right here around these significant support levels. We're in cash for the week, and we adjust that on a daily basis. So we'll see what happens.
Okay, so you'd say lower too, then, probably.
Yeah, qualified by breaking that 1978 on the 50-day EMA.
Right. Okay. And okay.
Which is an
So
interesting question. If you look today, you know, it opened down hard and came back up. And the last time I looked, just before we came on, it's right at that level. So it's a real battle going on here now between the bulls and the bears.
okay. And okay. And question 3 of the survey is meant to gauge confidence of the respondents. So everyone is asked to select 0 through 10 to gauge their confidence in their answer to question 2, whether they selected higher or lower. And so for this week, the average of all guesses was 6.381, and the average for higher guesses was 6.333, and the average for lower guesses was 6.422. So the bearish guesses had slightly more confidence again this week. And let's start with Alla again. If you had to gauge your confidence in what you said earlier, what would you say for this week?
Again, for the short-term trading, I would not be selling S&P yet. I would be remaining extremely cautious with this ultimate support levels. Everything depends on volatility that we will witness for the next few days, how quickly the market will continue its downtrend. So again, I'm still looking on the hourly chart, and that level 1975 remains the key. So if we are ignoring the events of today, the projection on daily chart long term is definitely bearish. But again, I'm seeing pretty impressive bullish impulse that's pointing down to the upside, and depending on volatility factor, we will see when downtrend will pick up this steam. It really, I am looking on the news and multiple news later on the week, which it remains to be seen if this bullish rally will continue through tomorrow.
Okay. And thank you. And John, where would you guess, or where would you rate your confidence?
Well, I'm 100% confident because I'm in cash, and I don't guess, David. I just let the market tell me what it's doing, and until we break one of these levels, one way or the other, nobody knows. I mean, we're in sort of a no man's land here, and that's. But as Alla said, the general overall field of things is bearish on the longer term.
Okay.
We'll get into the next question. This can change in a moment, and we'll talk about that in the next series of questions.
Right. Okay. And so continuing on with the report, the bottom of page 1 always shows a brief summary of what happened over the last week. It also shows the charts that have the full history of the timing research project, the data we've collected. So moving on to page 2 shows the numerical full history. So if you download the report, you can view that. And then on to page 3, which starts the open-ended questions. So question 1 of each week always talks about, simply asks what developing events, technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the markets. So Alla, do you have anything else you're watching for this week that you might like to talk about?
Well, if I would be trading S&P nowadays, I would be trading S&P with extremely low volume because S&P is incredibly fragile due to events in Russia and Ukraine, which, as far as I'm concerned, remain extremely unstable and can change at any moment. And S&P responds with drastic volatility. So for that reason, it's extremely important to be very, very careful trading S&P nowadays and paying attention to events in Russia and Ukraine, as well as non-farm coming out on Thursday is absolutely critical. So those to me are two critical events this week for S&P. I'm sorry, actually Wednesday and Thursday. Yes, non-farm is Wednesday.
Okay. All right, thank you. And John, do you have any other events you're watching for this week?
Well, yeah,
Affect the markets?
a couple of important economic reports, some PMIs, and the big event, as Alla mentioned, was non-farm. And then I think one thing that what this market has really been all about since 2009 is central banks, and Mario Draghi is meeting in Naples on Thursday with the European Central Bank. You might recall, a couple of years ago, he said, we'll do whatever it takes, and now he's going to probably have to actually do something. And whether that's easing or whatever it is, some kind of stimulus, that would rally the markets, significantly. He's fighting some big problems there, with deflation and recession around the Eurozone, and they're our largest trading partners, so that's clearly an issue. So any kind of stimulus there is going to be, positive, at least on the short term.
Oh, okay. And all right, thank you. And let's move on to question 4 of the survey. Is different each week. Ask about current events or other things related to trading and investing. This week, the question was Alibaba Group's IPO debuted on Friday, September 19th at $68 and quickly jumped over 40% in its first day of trading. The question is, where do you think its stock price will end up after 1 year of trading? And looking at the live display right now, it is currently at 88.28. So I went through and quantified all the responses that I could from all the survey respondents, and the average guess turned out to be $94.19. So let's start with you again, Alla. What are your thoughts about Alibaba? Do you have any guesses to where it will end up after its first year of trading?
No, it is way too early to tell. I need to allow for at least a few more weeks for Alibaba to settle down, for the price formation to finish. Once the formation is finished, I can give much more accurate projections. Also, it was quite entertaining 60 Minutes yesterday, as he was the subject of 60 Minutes. So I highly encourage you, if you're trading Alibaba, to find that segment. It was excellent.
Oh, okay. I missed that, but thank you. And John, do you have any thoughts about Alibaba?
I would say it seems overpriced to me. I mean, it's more valuable than a lot of huge American companies. So my guess would be down. These IPOs tend to generate lots of heat at the beginning, and then short sellers come in, option players, and so on. And typically, they're a sucker's play for a little guy like me. The good deals are gone before it becomes public, in my opinion. So I would say down.
You'd say down after the first year, you said?
Yeah.
Oh, okay. All right. Well, that finishes up the report for the week. Did either of you have any other comments you'd like to share with our audience?
I can't reinforce enough the danger of being in the markets currently on S&P long term. You have to be incredibly aware of the events. You have to be extremely cautious because monthly charts way overextended. This rally is very, very close to ultimate exhaustion levels. So just extreme caution on S&P. That's my position on S&P long term.
Okay. Thank you, Alla. And John, did you have any other comments?
Yeah, I would agree with that. Every technical indicator points to that it is overbought, overextended, overloved. Seasonally, October tends to be a rocky month if you go by the seasonality kind of trading things. And then usually around Halloween, you get the Halloween indicator, which says if you look even during the dark ages of the Great Recession, the period from Halloween through January had a little mini rally in there. The big factors are the end of quantitative easing. This market has been largely supported by that and how that plays out. And again, it's vastly overbought on all kinds of indicators, technical, Tobin's Q, a number of different things. It's this, I think, the third most highly valued market in history after the dot-com bust and the Great Recession. It's more overextended than even before 1929.
Okay. Sounds good. Thank you, guys. I want to so I just we have one thing like this in Alla Peters. Nyaradi of WallStreetSectorSelector.com. And everyone, want to encourage you to go to TimingResearch.com/current survey before Sunday and fill out this week's survey. It's available there each week. And again, if you'd like to see the most recent report or any of the previous ones, just go to TimingResearch.com/reports. So that is our show for this week. Thank you again, Alla and John. And thank you, everyone, for watching.
Thanks, David.
Thank you, David. Thank you so much. Thank you, John. Thank you, traders. Have a beautiful week.
Thanks, Alla. Nice talking to you.
Thank you so much. Bye-bye.